Volatility has been in the name of the game, and we saw that in global markets as well. So let's quickly take you through what's happened around the world and start with US markets close on Friday, which was in negative territory. So that pressure is beginning to show, including on, I would say, your mega cap tech stock rally is also fizzling out to some extent, whether it's an Nvidia, whether it's your Apple, Meta, etc. So that's seen a weak close. All of the data that has come over the last few days, last week as well, and some over Friday, has made sure that inflation fears are back, and that has become the predominant factor. And Niraj was talking about bond yields. Bond yields have been inching up. The 10-year is north of 4.3% ahead of that Fed meet, so that nervousness definitely there. Even crude is not in the most positive territory. You've had commentary from OPEC, from the IEA, that is now forecasting tighter supply. So you've had the Brent at $85 plus, but that forecast has actually changed for some of these agencies from saying a surfeit of supply to a tighter supply. And a lot of that, of course, because of, I would say, the new leg of the Russia-Ukraine conflict, which is hurting crude prices and the forecast there. But Asia is going to be the big factor. I just want to pull up what's happening in Asia, because you've had China data out, I would say just about 15-20 minutes ago, which is quite positive. It's better than expectations. Economic data on China. So you're seeing the Shanghai inch up, the Nikkei. You have Bank of Japan on Tuesday that will decide its rate cut policy, and it promises to be historical. And guys, we're so focused on the Fed all of the time, but the fact is, for us, Bank of Japan's decision, it becomes very, very crucial on how funds flow into emerging markets.
And dollar yen, I think that's critical as well. I think if they do, there are economists to believe that Japan, after 2007, will be moving out of a negative interest rate regime. Now, that will mean a stronger yen. It will, of course, have impact on Japanese equity markets, but more importantly on the dollar-yen trade as well, which is a very critical segment, by the way, in currency markets in India as well. So it's going to be exciting.
So BOJ becomes important. Will you go from negative to 0% interest rate? And that changes the momentum for where global fund managers place their money, if that so happens. Apart from that, I'll quickly pull up what the fund flows were like on Friday to give you an idea of how, I would say, careful investors are being overall, because you don't have very big figures. FI has bought about 849 crores, DI has sold about 682 crores. So the trade setup, I would say, is neutral globally. What about domestically? Of course, huge news weekend with the poll dates out.
Yeah, and there will be so much of data that will color around that as well. So I'll leave that for a special thing that we will do. But yeah, I mean, frankly, from our market's perspective today, global weakness and the uptick in yields predominantly driving the Asia weakness, which is very likely going to wane in on our markets as well. The implied open may or may not give you the correct idea, but very likely that we'll start off on a flattish note or a downward bias, and yes, about 54 odd points downward. So not surprising that this is there. And frankly, I mean, if you look at the bent of the market, independent of the fact that the small caps have done poorly, just look at the sectoral indices last week and that gives you an idea. The differential in the weekly performance between BSE IT, which is a defensive, and BSE real estate, which is the aggressive index, high beta index, 10.5% differential. That is stark. It has not happened in the last many months, and this differential kind of gives you the bend. It's not that people are rushing out to buy IT because fundamentals are strong. It's just some bit of a safe haven kind of parking of money, if you will. And at the same end, real estate is showing some tremendous fundamentals, but high beta, and in the market which is coming off, small caps are coming off, high beta tends to underperform. So 10.5% differential kind of shows you where the bent of the market is. It's very likely that small caps stay range bound with a downward bias, but because so much of selling has happened, that there might be, who knows, just a bit of a pullback that we might see in select small caps. I mean, we probably see auto ancillaries being in the thick of things today by virtue of what happened in Friday with regard to EV. And all those EV-linked auto ancillaries will come back into play today. Some of those chemical companies will come back into the play today because of the Chinese strong data. And who knows, metals might too. We've seen Hindustan Copper do that, but maybe some of the other metal names also come back into fray. So selectively, stocks will do well, but otherwise, the bias seems very difficult to bet on something very constructive for the markets unless... we know the Fed won't pivot, but unless the Fed commentary changes ever so slightly.
It's cautiously optimistic is what most people will put it as. And let's not forget, last week was the first week in 5 weeks where the markets actually ended with some cuts. So, like Niraj said, it's going to be volatile. There is a very great possibility of a downward bias on the street. Also, a quick mention on a little bit of economic data that came in on Friday evening, and that's the trade deficit numbers. Have widened for the month of Feb, coming in at $18.71 billion in Feb from $17.49 billion in January. Exports rose 11.9% from a year ago, and imports were also up 12.2%. Worth putting it down that it's important data that we track. You've also got the RBI policy mean that will be tracking all these factors cumulatively. And Niraj also mentioned you've got 9 companies that will be listing, 3 that will be hitting the primary market. So lots of action in that part of the markets as well. The first listing will take place by Kerala-based Popular Vehicles that will be listing on the exchanges tomorrow. So that's everything that you've got to keep a tap on in that sense. But let's take you through stocks. We'll put the focus back on all that, all those pockets of interest that the markets will be seeing. We'll build you up to that over the next 2 hours or next hour as we gear up for trade this morning. The big story that articles and, of course, will be in focus is the Adani Group companies. If you can pull those ones up and take a look at the news trigger there. On the weekend, there was an announcement where Adani Group will invest 1.2 lakh crore rupees across portfolio companies in FY25. It's 70% of that investment going into renewable energy. Remember, Adani Group's planned investments is 40% higher than the initial invested amount in the current fiscal year. Investments will be made in energy, airports, commodities, cement, and media, to name a few. They would have incurred already $10 billion of investment by 31st of March this year. So Adani Group companies are going to be on your radar this morning. It's going to be interesting to see how the stocks react. A positive up move cannot be ruled out at this stage. Well, apart from that, relatively smaller companies, but it's all about order wins. In fact, between Friday to this morning, a whole barrage of companies have won orders. I'll start with Aircon. They've received the letter of award from the National Highways and Infrastructure Development Corporation for the construction of a 2.5-kilometer twin-tube unidirectional bypass tunnel. This is a big order. In fact, it's to the tune of 630 crores. The stock was already up 4% in trade on Friday. The excitement could continue on back of this order. Railtel as well. Railways have also been buzzing. We saw that last week. We see that this morning. But there have been order wins. Railtel has received quite a significant order too. 352 crores from the Municipal Corporation of Greater Mumbai. They will be installing mainly HMIs for BMC Health Department. Fourth quarter order inflow, remember, stands at 1,313 crores. So again, a big one there, significant, relatively large in terms of the order book that they would be looking at for fourth quarter. 1,300 odd crores is where this is over 20-30% of that. The stock was up 3.5%, could continue to see a further up move in today's day of trade. But that's the few that we have. But Tamanna, it's going to be auto ancillary in play this morning as well.
Oh, absolutely. And, we saw the first sort of push of this during closing on Friday when the news came in, and we had a really nice piece that Tushar and Sajith put together on the new EV policy. But a clutch of brokerage notes out this morning, and this space is definitely going to be on focus. So the first reaction of the market was a bit negative on your M&Ms, your TAMOs, your key PV players who want to be there in the electric space. There was a note out, or there was a statement out from Mahindra & Mahindra over the weekend saying that we welcome the policy and are born electric the car is going to be out in 2025. But what's the policy? So they have allowed import of 8,000 units at a lower duty, and this lower duty is significantly lower because it is actually at 15% versus the current duty structure of 70 to 100% for 5 years. Now, the new rules essentially pave way for Tesla, VinFast, all of these players to come into India. So on the face of it, you may see it as negative for your current four-wheeler passenger vehicle players, which is largely, frankly, Tata Motors is dominating that space. The others are trying to play catch-up. Maruti will have to wait and see where they are. For the two-wheeler space, there's a bit of stagnation in growth here. But that's the way forward. Let's just quickly tell you what brokerages are saying. MK is betting on Motherson Sumi as the best play instead of going in for individual OEMs. So Auto Ank in focus. Citi says the new EV policy makes the competitive landscape tougher for future electric cars by Tata Motors and M&M. So keep that in mind. Auto component makers like Sona Comstar, Motherson Sumi stand to benefit from the entry of a Tesla, because remember, all of these incentives are linked to how much they make in India or what components they get from India. It's linked to a PLI scheme as well, and the cap is the same. Nomura says the new EV policy will support the entry of Tesla in India and some other global OEMs. And again, they talk about Sona Comstar, Sansera and Motherson Group. So these are some to watch out for. The other stock that I have on my list is Zydus Life Science. They've got a final nod from the US FDA and 180 days exclusivity for two formulations, finasteride and tadalafil. So these are essentially for something called BPH, which is a benign prostatic hyperplasia, prostate enlargement essentially. So that's an important market as well. And it now has 392 approvals and has filed 460 ANDAs. So the market size is pretty decent for this one formulation. So I would watch out for Zydus. It's fundamentally at least positive news. The other stock on my radar, and I don't know if we've managed to make the graphics, but we can pull it up, is Dronacharya Aerial Innovations. And we're going to talk in some detail about elections and its impact and spaces that are exciting. I know Niraj is going to talk about Hindustan Aeronautics, but a private player, which is an interesting defense play, is one you could look at. So the news flow is that they've got an order for supply of drone controllers from Northern Command. And that, for a private player, is a big deal. Now, this company has in the past had tie-ups with large private conglomerates, including the Tata Group, the Adani Group, for licensing of pilot training for drones. And now they have this order supply. They also have an order for precision mapping systems from Earthtree Enviro. But the big one is the order from Northern Command. So as drones become a larger and larger play and part of any country's defense arsenal, a player like this, and few listed players in this space. So this is one I'd watch out for, Niraj.
Most certainly. And, autos probably become auto anks probably become the stocks of the day this morning, but there are a few others. So Torrent Power could be interesting. Remember when they first ventured out into this grid-connected wind-solar hybrid project piece, the stock was very, very active. Now they won 300 megawatt LOA from the distribution unit for setting this up. So give or take about 1,500 crores or slightly more than that. So could be active today. Watch out for Torrent Power. Watch out for International Travel House. It's a small stock, but ITC has entered into a share purchase agreement to acquire 45.36% stake. So ITC is not the stock to focus on. International Travel House is the stock to focus on. So watch out for that one. That will be active in the session today. That's the second one on my radar. And watch out for HAL. That's the third one. It signed a contract worth 2,890 crores with MOD for midlife upgrade of 25 Dornier aircrafts. HAL, as Samina was jokingly saying this morning, wins an order every second day. I don't know if the stock reacts every second day or no, but frankly, yes. The order book to at some point of time in the day today, we'll do a piece on the book-to-bill ratios for some of these defense companies, because they've always looked strong. Have they improved in the last 2 or 3 months? That could be an interesting one to focus on. So watch out for HAL today, while it was down in Friday's session and while the market may look slightly sluggish, but HAL could be active. There are a few others, guys, but I'm sure you guys have some other stocks as well.
Just commenting on drones and defense. In fact, just out of the budget, I think the Defence Ministry was also very clear that drones is a piece of investment that the government would be very big on making because it's low cost and, of course, massive impact, right? So even looking beyond the company, you mentioned HAL, you've also got Zentech. One of the biggest triggers for Zentech in the last couple of months has been drones. Paras Defence, to name another one, Ratan India, those are the other few in the space that have been moving largely on back of these very big drone order wins.
You know, one piece of news which depends on the way, it's actually disturbing. So there were recent protests, and to quell those protests, drones were used. Yes, that is, you know, it has a whole different set of connotations about how protests are quelled, etc. But the fact is that this is how drones are being used. We thought it's just going to deliver pizzas and burgers at some point. You know, that's also happening. Right? But yeah, warfare, agri. I mean, the use cases, you know, mind-boggling. But I want to come to the next piece that we're talking about.
Stocks.
Or you want to?
Yeah, there are a few stocks that we should also highlight. So Copran would be in focus because Quant Small Cap Fund bought about 2.5 lakh shares, which is 0.5% of the equity, not too much, at 251 rupees a piece. So Quant action usually at times bring about some reactions. So watch out for Copran. Was up 9% in Friday's session, could be active. Watch out for Hindustan Copper. Very strong delivery-based buying seen on Friday's trade. 1.47 crore shares marked for delivery versus 5-day average of 28 lakh shares. That tells you a story about the quantum of buying that happened in Hindustan Copper. And the reason is because copper prices have surged to 11-month highs on China's plan to cut output. That, coupled with Chinese data, could well be a further trigger.
Just a quick one, Niraj, on Hindustan Copper. It's now moved into an F&O ban.
Yeah.
So you want to be a little mindful in terms of trading activity. While it looks very positive for the counter, it is in the F&O ban. So a lot of activity may be capped on back of that news flow, on back of that.
And just last piece, since we're talking about delivery data, watch out for these three stocks. The price and the delivery marked versus the 1-month averages for a Cochin Shipyard, Relaxo and ZF Steering. Really strong delivery-based buying seen in each of these in Friday's session. In fact, some pretty strong moves compared to the 5-day averages as well and compared to the 1-month average in the volume front as well. The stocks moved up on Friday by more than 5% with volumes greater than 3 times the last 5-day average volumes for each of these three stocks. So watch out for Cochin, Relaxo and ZF Steering as well.
Just LIC, if we're talking about another one, this might be seen as a bit of a negative. So the government has approved a wage revision of LIC employees, and the overall hike in the wage bill shall be 17%. It incorporates enhancements of the NPS contribution to 14% from 10%. That's going to be perhaps a big bit of a hit for LIC. And, you know, when we talk about all of these government-run companies which are in favor, at the end of the day, these factors will continue to maybe be a bit of a overhang. Yeah. All right. Should we get to the election piece? Because I'm excited about it.
No, everybody is.
And also we have Gurmeet Chadda on with us. Gurmeet, just before I come to you, a few bits of data that we put together. Of course, polling will begin April 19th. Counting day is the 4th of June, a Tuesday. The question is what to expect for the next 3 months from now to counting day, give or take about 3 months. So now past trends indicate that you will see volatility in this period, and I just want to pull that chart up that we have of what trends have shown in the last 20 years. So we've picked the last 4 general elections. Keep in mind that 2004 and 2009 were a bit of an exception. 2004 was the first time that you had a coalition government with the predominant role of the left, and that was a bit scary for the markets. 2009 had the run-up to the global financial crisis, so we saw that as well. But if you look at data over the last 20 years, and we'll try and pull up that chart, you see that Nifty has seen a slight drop post-polls, at least after the last election. In the poll period, which is the yellow bar, I hope you can see it clearly, you see it's not too much of action. There is range-bound kind of movement on the Nifty, and in most cases, 3 out of 4, at least in the last 4 general elections, you saw the Nifty recover post, but in the last general election, it was down about 1.4%. So watch out for range-bound trade. The only other factor I'd like to add is that FI inflows are likely to improve post-polls, because that's what we've been hearing, that FIs are waiting on the sidelines for the election to be done, that uncertainty to be over and then come in. Remember, the point of continuity is largely factored in. The continuity of a BJP-led government is something that the street is expecting. Railway defense will be in focus most likely. And if they hit that 400 plus mark that they've set for themselves, that will be sentimentally positive. Although having said that, you don't really need that to run a government, but it will be sentimentally positive. Let's begin with Gurmeet Chadda, Managing Partner and CIO of Complete Circle, joining us this morning to talk all things election and markets. Gurmeet, very good morning. Let's begin with you telling us how crucial this will be as a factor for the markets right now.
Good morning. I think typically if you see previous election, last 3-4, which I've been tracking, is you typically see a bit of a correction leading up to March and then a bit of a pre-election rally. The quantum of the rally is obviously varied. But this time I think you can't compare it with the previous election one because largely the market is expecting a repeat. The debate is on, as you rightly said, the number of seats in terms of if they can do the big ticket reforms. So I think the number is more important here than the actual outcome, which I think is, in my view, some of it is in the price. But you never know. Politics, anything can happen. In 2 months is a long period in politics. So I think 2-3 things market would hold on to. Looking at what the Prime Minister said in one of the speeches, is a huge impact. He's going to make in next 5 years on few pockets he highlighted. And as a portfolio manager, we'll be more keen on that. He spoke about defense exports being a very, very big number, maybe more than doubling from here. He spoke about a complete turnaround in railways. They're already seeing that with Metro, Vande Bharat, and things playing out. He also mentioned semiconductors, in next 5 years being, part of the. You've seen what has happened to this space with AI globally, and how the magnificent top 3-4 tech companies have turned it around. So I'll be focused more on what they're going to do more if that kind of number comes in. Secondly, I think next 2-3 months are also important, which one event which we don't discuss is this bond market inclusion. I think it has a far, far bigger bearing in the long run on the cost of the government borrowing. Second, if we can manage to get $30-40 billion of annual flows, it frees up, the domestic savings and banks to, allocate that money more towards private capex and funding, the economy more than just funding the deficits. So I think that to me is a much, much bigger event, which has a huge long-term bearing. Election will have, 5-10% bearing in the short run.
Gurmeet, you're absolutely right. The bond market inclusion becomes a big event. But having said that, in election season, it throws up a lot of excitement in terms of certain pockets of investments. And we spoke about railways, defense, etc. What would be those spaces that you're looking out for? You've already seen a fair run-up in some of those stocks. But would you be looking for new ideas there or new opportunities there?
Well, absolutely. I think, I think there's, I've been speaking to a few headhunters, who happen to be some ex-colleagues and friends. There's some pickup even in IT hiring. So I think the way, this revival is happening, with private capex picking up, I think one pocket I'd be keen on is IT and digital engineering. I think that to me is what this decade is going to be about, revival of digital engineering and manufacturing. It is tech plus manufacturing in very layman terms. Secondly, I think the banks may come back in favor. The financials have been out of favor for a while. I think liquidity has been tight, interest rates have been going up, they're struggling to raise deposits. RBI has been very stringent on pockets like gold financing, IPO financing, and a lot of other pockets. So there's a regulatory stress there. I think a lot of could change over the next few months as, liquidity eases as we get into election year. And as I said, I think the turnaround in defense, the turnaround in the public companies, some of it is structural. Obviously, there are a lot of Me Too PSUs also which have gone up. But I think right now, this year would mark separating, as you say, the men from the boys.
Good morning. It's Samina as well joining in. PSUs have demonstrated very strong performance and are worthy of attention. In 2023, the space was up 77%, 24%. Even in 2024, they've gained quite sharply. But valuation still attractive, I'd imagine, for the PSE index, which trades at a PE of close to 10. As a trade, buying the Nifty PSC for the next maybe 2 to 3 months makes a good trade, you think?
I would not really play the entire space, to be honest. As I said, you got to be more selective here. So let's say a power grade, if it trades at 13, 14 times, government stake is already 51%. So unlikely to have a overhang in terms of government selling more there. And you have a clear view that next 5 years you have 2.5 lakh crores worth of transmission line, projects up for grab, where they have 60% plus market share. Some companies in railway, including Railtel, RVNL, the wagon manufacturers and the coaches manufacturers, including the likes of, let's say, Titagar. Defense, you see the kind of export orders we are getting. And, obviously, all of us are working with a certain number, but the quantum and the value of exports can really surprise you. And I'm looking at more export orders which are more medium term. Sometimes you get carried away with the order book being 10 years and a lot of it getting captured in price. So something like HAL, Solar already is done stellar in last 1 week. See the kind of defense orders they've got. So you got to be selective here rather than just playing the entire thing, in my view. In some cases, as I said, a lot of the change, including management, including capital allocation, a lot of it seems more structural than just, the entire, everything going up by just the sentiment rally playing out.
Gurmeet, talking about public sector undertakings, I don't think you mentioned any specific PSU banks. Now, I believe with the way orders are being awarded, these government-run companies are also being encouraged to work with PSU banks, at least in the smaller cities. And we've seen that in terms of the kind of growth, profit increase that we've seen between some of these PSU bank leaders. Would PSU banks be a place for you to play? And if yes, your top pick on the PSU banking names?
Absolutely. As I said, what bond inclusion does is it frees up, a lot of capital, the domestic finance savings to go into, capex and other related aspects of the economy. And PSU banks are the largest holders of the GSEC. In fact, near term you will gain by, treasury gains, which will release some pressure on NIMs, etc. So already the 10-year is down to about 7%. It's dropped like 15, 18 basis points in last month or so. I think you'll probably see it at 650, 660 levels by the end of the year. So there'll be treasury gains in the near term, which will offset any pressure on NIMs. And, you free up more money to lend more. So your credit remains robust on the long run. And as I said, the NPA, the way the cleanup has happened in a lot of the PSUs, I think it augurs really well. And I think RBI has been very, very proactive now in identifying any excesses in any pocket, whether it's been short-term personal loans or, IPO financing, any stress indications. I think the regulator has been quick to act. So our picks are more the top-run PSU banks. We really don't want to go tier 2 because, you have one bad news and it takes away all your gains. So we are more happy with the HDI and the Bank of Baroda.
Gurmeet, I wanted to know your take on the consumption play that you see in the run-up to polls. Now, we've all been talking about electoral bonds and political funding. The fact is, electoral bonds is a small percentage of what parties actually spend. Elections is a expensive business. A lot of spends go into the economy and boost as well. I'm trying to understand if there is any play here for your consumption space, your FMCG or staples players, for anything like two-wheelers or, in the auto space, where you will see an impact of all of this flowing through?
Yes, I think some of the election is a bit of a mini stimulus, with kind of money which gets spent. And this is a long-drawn election almost, I think, starts in April and goes right up to 2nd of June. So much longer than even the last election in 7 phases. And, I think some of the if you see the recent reports, there is some early signs of some revival happening. And I would not want to right now, be overly optimistic about it. But I think some fill-up will happen. Also with this entire stress test and some bit of money getting taken off, I think there could be some favor of flows moving, the liquidity moving towards more defensive pockets like FMCG, IT, pharma, etc. I would be more keen on agrochemical as a space. I think it's been at the bottom of the cycle. You may have another quarter of pain. So we are looking at that as a pocket. It will get benefited as we get into the election mode. And some FMCG names. It's been long consolidation in names like HUL, Daburs of the world. So there could be tactically some opportunity there. Two-wheelers, in my view, the run-up has already happened to a large extent. If you see the price movements, it's probably capturing in some revival there. Maybe you can go level 2 in some of the auto ancillaries of some of these two-wheelers, which haven't really gone up at the same time.
Right. Thank you, Gurmeet. Great getting some perspective from you on what this election rally could look like. Niraj, Tamanna, you know, it's Gurmeet, and of course, everything on the wires also tells you about how it's going to be an exciting rally, how sectors like railway, defense, banks, auto and consumption, IT, everything's going to do well. I honestly want to know what are sectors you want to avoid in the next 3 months, right? So if you've got a limited pool of money to play, if you're invested in a certain sector, where do you take money off the table and where do you direct that?
One, that every time we've had a double-digit rally preceding the first 1 year, the next 3 months there is no pre-election rally. So we're kind of looking at a period wherein we had a large double-digit rally already, and therefore one doesn't know if that will happen. So maybe avoid all sectors. Who knows?
Blanket avoid. That
maybe.
makes it easy.
But yeah, I mean, frankly,
what would you avoid in this market? I mean,
difficult.
Gurmeet listed everything.
Yeah, maybe policy-linked things you want to go light on because you don't know how many. Sorry, just finishing the point that there is no policy-linked decision that can come about right now per se. And if anything, who knows if one decision on OMCs disrupted them by 9-10% in a single day, you want to stay away, right? That's something you want to avoid. Play safe, maybe buy them 10% higher. How does it matter?
I think you're talking about the model code of conduct coming into play, and hence you have a limitation
so
of
no infrastructure projects will come in.
Yeah.
But even if there are some announcements that happen or companies make an announcement about maybe rate cuts or rather price cuts or whatever, that will impact the stocks, right? So they have just be careful with policy link, anything linked to government right now for 2 months. Post that, once the government, whichever government comes into power, looks like policy continuity, you make hay while the sun shines then.
I think the backdrop is really not going to be too much of action based on elections. It's you know, in a sense, because the result is factored in,
almost a given.
The bigger downside is if there is anything negative to worry about, which at this point looks unlikely. But Indian elections, I mean,
you never know,
Indian
right?
politics,
Just one, I don't know whether this has any bearing on it, but I think real estate could be one space a lot of people might start avoiding. Mumbai prices again supposed to come down. 2 months ago, of course, we're talking about how excited residential and commercial real estate was looking like. But there are articles this morning indicating that prices in real estate in Mumbai will be coming off on back of an oversupply. But we'll take a note. We'll take a break on that note. We'll come back. We'll put the focus on all the F&O action. It's going to be an important week. Lots of triggers. But technically as well, there'll be so much to watch out for, especially after what we saw last week. So stay tuned.
Welcome back. This is India Markets Open. We take a look at the futures and options space and how things are panning out. Well, Friday we saw a little bit of weakness seeping through with the Nifty coming off. Not too much change in open interest, a little bit of unwinding for the bank Nifty as well. The index came off by around 0.4%, and that's where we saw about 2.6% added towards the index futures in open interest. Well, moving on to the options market, again, consolidation continues. A lot of traction has now been in and around the mark of 22,000 to 22,200 and thereabouts. Consolidation continues, and that's also explained in the way the things are panning out for open interest distribution. At the moment, your 22,000 mark has the one with the max OI in terms of calls as well as puts. So I reckon that on Friday, a lot of traders went ahead and sold those triangles going into this coming week. Can we expect about a consolidation? Well, that's a wait and watch on that one. But moving on to your stocks, again, we are keeping an eye on ICICI Bank, MRF and PFC, which in fact saw shorts coming through. Hindustan Copper and Page Industries looking at longs. And among stocks which saw unwinding, let's pull that up as well. We saw largely a lot of unwinding on BHEL, Aarti Industries, MGL and Ipca Labs. So on the whole, keeping an eye on a very mixed market is what we are seeing, keeping an eye on indices and where they take us. But I reckon that it will be about the next 3 months now that we do have the election dates coming.
That's the point, right, Agam? So now that the election dates are out, what is the FNO positioning for the June expiry, if you will?
Right, so very interesting positioning, but remember that we're also going to start seeing a lot more of a build-up. So this is your open interest for the June expiry. The futures are not active yet, but the options market is active, and based on that, if you just apply a basic put-call parity, it indicates that the synthetic futures are currently trading at 22,500, which is a 500-point premium to the current market price for the Nifty. And as you can see, there are more green bars, and pardon me, there are more red to it as compared to green. So the red bars, of course, signify puts, which means that, and if you see it from a writer's point of view, well, it seems at the moment that a lot of these traders have written the 20,000, 21,000 puts specifically, and are expecting the markets to move higher in the near term, whereby they in fact get to make some money. And of course, on the higher term, in terms of the calls, there's a little bit of writing around 23,000, but the writing intensity is nowhere close in calls as compared to puts, which also indicates some amount of a positive build-up, at least at this point in time. Of course, this picture could certainly change dramatically over the course of the next couple of months. But just talking about today and, well, over the next few days, what can we expect from the markets? Let's get in a market expert here. We have Shilpa Raut of Prabhudas Lilladher who's joining us. Shilpa, good morning. Thank you so much for joining in. Your view on the benchmarks?
Good morning, everyone. Thank you for having me on the show. Talking about indices, we see that the FI's long-short ratio is now again constant around 38 to 40%. They're net longs at this percentage only, which also means that they're not aggressively bearish or they're not aggressively bullish. So probably, sitting out now for the brief period now for a couple of months from here will be the ideal strategy that can be followed from their end. So that is how we should also be prepared and well, play the way the trend is. So talking about indices, we see that Nifty is at a very crucial support at 22,000. So 22,000 if breaches, we will see 21,800 to 21,500 coming in very swiftly. And if we sustain above 22,000, then the hurdles are placed at 22,300 to 23,500. So a 500 points up and down from here for Nifty can happen anytime, in this following week. Interesting is far more in Bank Nifty. Bank Nifty, if you see even the, April expiry, you see that Bank Nifty is ready for 2,000 to 2,500 points up and down. Very, very, very clear in that aspect. So I believe that, either we would see 44,000 coming in or 49,000 for Bank Nifty. So the data is much more clearer for Bank Nifty. So playing out, long straddles at this point for Bank Nifty is much more advisable. So one can do March end expiry. 46,500 is around I guess the combined premium is around 700 odd, points from here. So keeping a stop loss at 400, one can do the straddle and long straddle straddle where you buy both calls and the put, because one side sharp movement will give you, very decent profit, which will also, roll out, the losing side of that, whatever strike, either the call or the put. So long straddle for 46,500 I believe is a very safe way to play. Keep a stop loss at 400 and look for targets till 1,000 to 1,200 from here. And talking about stocks, I believe there are a couple of stocks very nicely placed at this fall where Nifty has corrected and the stocks have eventually corrected even more. So there are two stocks I believe, one can play a little positional from here. The first one would be JK Cement. JK Cement should be a buy on every declines towards 4,000. Keep a stop loss at 3,950 and look for targets in between 4,300 to 4,500. So good positional trade is very well placed in JK Cement. The other one would be again, a buy in UPL. UPL also data suggests very good support at 450 zones. So, every decline, a buy towards 450, keep a stop loss at around 445 and look for targets of 520 to 540.
Shilpa, we'll leave it at that. Thank you so much for joining us and taking us through, these calls, as well as taking us through your views on the markets. Of course, markets are very interestingly poised, and Shilpa is also looking to buy into options at the moment to take advantage of, sharp movements on either sides of the benchmarks. And with that, it's over to you guys in the studio.
Okay, thanks for that, Agam. So that's the long and short of what's happening in the derivative space. Keep a keen eye out for this. Now, a focus on some of the key newsmakers. We've spoken about how autos will be in focus. We've spoken about how some of the brokerage notes, like, for example, the 11 top ideas from Jefferies will be in focus. What also will be in focus will be the investment plans of the Adani Group. Standard disclaimers, of course, the Adani Group owns NDTV, and you're watching NDTV Profit. But to talk about these plans, let's get in Vineet Bolinchkar, Head of Research at Ventura Securities. Vineet, does a 40% higher outlay than earlier envisaged and more of it in the green portfolio enthuse a head of research of a sell-side firm like yours?
So definitely, it's 30% higher. They were trying to deleverage. Now they are moving towards a, incremental debt to EBITDA of 1.5. And that is actually going to bring it down, the net debt to EBITDA. Apart from this, what we are going to see is, they are walking the talk of investing about, about 100 billion over the next 7-8 years. So 714s are 98. That's about what you will see being the incremental capex over the next 7 to 8 years. Important is that, that entire investment, 70% of it is loaded towards the green energy and hydrogen evacuation, generation and transmission. So we're going to see a lot of investment come into Adani Energy Solutions, Adani Green and Adani Enterprises. The rest of the investment they're planning to spend on airports and their ports business. So all the high growth and hyper growth areas where the group is focused on is going to receive a lot of that spend.
Let's do this company by company, and I want to start with Adani Enterprise. A few months ago, there was a report by by a US brokerage as well, the sell-side brokerage, that said that this Adani Enterprise is a publicly traded incubator and it does not reflect the kind of value of the other companies that Adani Enterprise holds. Do you agree? Do you feel like the current valuation of Adani Enterprise does not reflect all the parts of the business that it's currently in, and this additional investment push is only going to make it even more attractive at this price? And if yes, what is your target price on Adani Enterprise?
So I think, we just did over the weekend, we did a little bit of number crunching on, if you were to invest for a 4 to 5 month period in Adani Enterprise, what kind of growth can you get without value unlocking taking place? So we believe that their cash flows are expected, free cash flows would drive quite handsomely, and we are expecting a 135% upside from Adani Enterprises. This is not taking into account the, as I said, the value unlocking from listing the various businesses. There, what would happen is that once the businesses are listed, their investment multiples being sunrise sectors would be different. So at a bare minimum, we are looking at a kind of a near 135% growth, or doing 20% CAGR in free cash flows, discounted to present value, over the next 5 years. So that is the kind of growth that you will see coming from Adani Enterprises.
Vineet, just specifically want to understand about the airport play. Your Navi Mumbai airport, inauguration is going to happen, and the airport play becomes a big part of Adani Enterprises valuation. How much do you expect it to contribute, and what is your outlook there?
So, we see the management is looking to grow their airport business. They have a vision of doing $2 billion of EBITDA on this business. Okay, that is going to come about largely from the non-aero part. And they have a very, very large land bank, which they are looking to monetize into creating the space around the airport into a kind of a hospitality initiative. So having business centers, having hotels, having hospitals, and entertainment arenas around the place where they can enhance value for the people who are coming to the airport to see off the passengers. So all this is going to remain a very, very bright spot. They have a lot of land, 650 acres around most of the airports, which they're looking to monetize. And this is going to really, really help them grow. It will be the only, whenever it gets listed, it will be the only listed airport play globally, which is more than 1 or 2 properties. Say they currently have 8 airports along with the Navi Mumbai airport, and they're looking to acquire additional airport properties around the globe. And hence, they would, because they're on a high growth trajectory where their non-aero revenues are significantly lower than what others are, we believe that they will get a very, very high valuation.
Choksi also with us. Vineet, please do stay on. He's MD DR Choksi Investment Managers. Devin, very good morning to you. We're talking about all things Adani. Big investment and capex push announced over the weekend. And it's coming at a time, interestingly, when you have the election season also going on. Post-elections, the government capex push comes back into focus. A lot of focus on core infra projects. We want to understand, as per you, which of the group companies look the most attractive with an upside? A lot of focus on ports right now in terms of brokerage notes.
Good morning, Tamanna. Well, I believe that government's entire program of spending 142 lakh crores by 2030 onto the infrastructure is basically the catalyst behind this particular growth program that the group Adani has taken up. In my viewpoint, I think be it in the area of renewables, be it in the area of including green hydrogens, be it in the area of other infrastructure assets, including airports, seaports, roadways, railways. I believe that this group is fully focused, and probably the only group in the country which is fully focused on building the India infrastructure in line with the government's vision. So, from a perspective of looking at the business per se, one would look at financial numbers like this. That currently, they are about 80,000 crore EBITDA, and which is growing at the rate of around 20%. So obviously what we are talking about is in 4 years from now, we are talking about growing the size of the EBITDA from 80,000 crores to 150, 160,000 crores. And that's where probably one could argue that in next 5 to 10 years, when India is progressing faster in building the infrastructure, this group would have actually created a sizably large amount of infrastructure assets in each of these verticals. Pertinent question of yours as to which one looks better. To me, I think the name of the game is integration. If you have the roads, if you have railways, if you have ports, and if you have airports, ultimately what you do is you integrate them and create a very powerful logistic management system which is ultimately creating a large size possibility of generating the revenue on a sustainable basis. In infrastructure business, I think sustainability helps, and that is where probably they are better off. On the other side, the utility portfolio, which includes the generation of power, be it from thermal sources or be it for the renewable sources, and then distribute it through the transmission lines, is again, I think, a portfolio which remains absolutely formidable portfolio. So, in my viewpoint, I think each of these particular portfolios would have a meaningful contribution to talk about. Maybe it would be not correct on one's part to I think say okay, which one would get the priority. Of course, I believe that the port has a larger amount of visibility, largely because of the eastern and western port connectivity that they've established with the number of ports into their portfolio above 15, including the global ports. And at the same time, I think the cargo handling capacity, which has far exceeded 500 million metric tons per annum. So to a greater extent, I think the port gives immediate visibility, but rest of the infrastructure companies are equally joining in and creating the integrated one.
I want to talk to you about Adani Enterprise. What do you value their airport business at per share? What is the road business value at? And lastly, the solar wind valued at? And what does that bring the total to in the current market dynamics? And keeping that in mind, how much percent upside can investor expect if somebody goes out and buys Adani Enterprise today on back of these three key contributors to Adani Enterprise?
So, Samina, I think we'll take up this particular question in a little different manner. I believe that I think the amount of traffic that each and every airport that they have already acquired, which is increasing, and there are a number of airports I think which they are adding into the portfolio. So on one side, we are having the organic growth happening through the number of passengers taking the airport. On the other side, I think the inorganic growth through which I think you are acquiring the newer airports and creating a larger size across the country. It is the way in which I think you would start valuing this particular business per se, the airport business. More importantly, this particular business is a cash generating business. So on the one side, I think on a daily basis we generate cash, and at the same time, I think it's working on a negative working capital because I think your payouts it takes later, but your the inflow of money on operation side takes up I think on a day one. So we believe that I think on a DCF basis also, if you want to value this particular business, it would be sizably one. I think as I see it. Of course, I don't have a number at this point of time to put before you, but maybe this number would keep on evolving and changing as the dynamics of this particular business is. We believe that I think the road infrastructure in a similar manner, I think the number of kilometers that they're putting across and acquiring the newer roads I think from the NHAI, I believe that they have got a larger amount of visibility based on the number of kilometers that they will have and the toll that they are collecting. All in all put together, I believe that I think it offers 25 to 40 years of visibility on the DCF valuations, and that's where I believe that this company would have continuous growth of around 20% plus in this particular businesses. And soon they get demerged, it would probably create the unlocking of value for investors in the next 2-3 years time.
Right, Vineet, one quick last question. Your top two Adani favorites from the group for an investor looking to enter the Adani Group companies from a 2 to 3 year timeline.
So, I think Adani Power gives you the maximum bang for the buck. We think the stock can grow very well. And, Adani Power and Adani Enterprises would be my two top picks from the Adani Group of companies over the next 2 to 3 years as an investment. One more stock that I will add to this is Ambuja Cements, because they're finishing a large capex, which is going to actually catapult their capacities and make them a very formidable player in the industry going ahead.
Devin, just to get your top picks from the group companies.
If you are looking at near future, which is 2 to 3 years, which you mentioned, then in such situation, I think Adani Enterprise should be the tall one. Because in this company, you have got renewables, in this company, you've got airports, in this company, you've got road infrastructure, and also connects, which is your data center business. each of these businesses in next 2 to 4 years time are going to have a separate monetization drive. And that's where I believe that the investors would make maximum amount of money in a shorter period of time if they have invested into the enterprise, because that is a company which will probably helping unlock value faster. Rest of the businesses are good, but I think they are already maturing and they are already growing at a steady pace now with their own cash generation. This is one company which is bringing out new babies into the market, and that's where probably the excitement would be high as far as the unlocking and the monetization of investment is concerned.
Devin and Vineet, stay on with us. But this was our focus on Adani Group companies. Just quick disclaimer: the channel that you're watching this on is owned by the Adani Group. We are looking at the story because of its editorial significance and the fact that there has been a huge announcement, but that standard disclaimer there. Stay on with us, please. Kunal Shah joins in. He's Senior Technical and Derivative Analyst at LKP Securities. Very good morning to you, Kunal. Let's begin with, where you see the levels going this morning for the markets.
Good morning. I think last week what the markets had behaved that we are given a breakdown for Nifty below that 22,200 mark. So right now, market has stuck in a broad range where we see 21,900 as a support and 22,200 as a resistance. So on the downside, 21,900 is where the 50 DMA is placed on technicals, and 22,200 is the level where the 20 DMA is placed. So you can say it's a perfect range in which the market is stuck. A break on either side will have trending moves on the market. So I think the first 15 to 20 minutes will be very, very important. If we are able to hold the mark of 21,900 on the downside, then we might expect some recovery toward 22,200. However, if 21,900 is breached in the opening 15 to 20 minutes of the trade, then we might see the correction continuing towards 21,500 on the downside. So I think the opening of the market, the first 20 to 25 minutes will be very, very important where we trade, and post that we'll get a trending moves in the market.
Kunal, quick word on Bank Nifty. The 2-week high of Bank Nifty is 46,870, but I believe Friday's close of 46,600 is fairly critical for the index. And it seems like there's a good chance today that could be breached. If that does happen, what is the trade on Bank Nifty?
I think Bank Nifty, if you look at the Friday's closing, we had formed a doji candle on technicals, which indicates indecisiveness. So still there is a tussle between the buyers and the sellers. One point to notice out that Bank Nifty is still trading below its 20-day DMA. So clearly, once we surpass that 47,000 mark on the upside, then only aggressive bullish bets should be placed for the Bank Nifty index on the long side for targets of 48,000 on the higher end. The lower end support for the Bank Nifty is at 46,400, 300 zone. Again, in the opening, if we breach this mark, we expect this correction to go towards even 45,700 on the downside. So I think for both the indexes, it's a wait and watch situation. Since Bank Nifty is showing much positive signs compared to Nifty at the current levels, one can trade with a good risk to reward ratio at the current levels, keeping a stop loss of 46,400 and looking for targets of 47,000 on the upside. And if today we close above 47,000, then we expect a sharp short covering rally towards 48,000 on the upside.
Quickly, before we go into a break and start tracking pre-open, what are your top two trading calls? I believe we've got a call on Polycab this morning. That's an interesting one.
Yeah, so firstly, if you look at the technical charts of Polycab, the volatility in the market, what has been in the last 1 week, Polycab on the technicals has been in a sideways trend. And on Friday's closing session, we saw good recovery from the lower levels with volumes. So I think we can see some short covering coming over here in Polycab. I'm expecting levels of 5,030 to 5,100 on the upside, and one can keep a stop loss of 4,770 on the downside for Polycab. So Polycab is something which is looking good. Plus, it is sustaining above its 20 DMA. There are very few stocks which are sustaining above the 20-day moving average. Polycab is one, so that could give you a good upside. My second will be on the sell side. So as we mentioned that if the market breaks the support of 21,900, we can see the selling pressure getting aggressive. Out of that, pharma as an index has shown some signs of weakness at the higher levels. So whatever bounces you are getting in pharma, they are being sold into. So that is why Sun Pharma is a sell for me. at the current market price only. Keep a stop loss of 1575 on the upside, and one can look for targets of 1520 to 1500 on the down.
Right, that's a sell on Sun Farm and a buy on Polycab. On that note, we'll take a quick break. We'll come back, track pre-open and gear you up for trade this Monday morning, so stay tuned.
The pre-open rates kicking in, and we'll have a start which is lower. May not be what the Nifty is suggesting right now, may well be as well. Let's wait for the first 8 minutes to come in. But a clutch of stocks would be in focus, autos in focus, IT by virtue of the resilience that it showed would be in focus, the Adani group could be in focus as well. So lots of very specific sectorals in play, so keep an eye out for all of those. But frankly, we'll talk about autos in detail as well. But Devin, good morning, Niraj here. Come in on whether auto ancillaries would form a part of things that you would look at, considering not just this EV policy, because that will only enhance their expertise and reputation to be able to supply to global OEMs making in India. But the belief is that everything from a Sona Comstar to a Samil to a Sansera, which all manufacture some parts for Tesla and others, and global other EV companies, would actually benefit as a result of this EV policy. Would you be a buyer into auto ancillaries, select auto ancillaries?
Yeah, good morning, Niraj. Absolutely, I think spot on. I think this is the time when probably you need to go long on the auto ancillary. I would say that I think this is a kind of a situation which we used to have in 1980s when Maruti started, when the ancillary started participating slowly and gradually. Now that the EV business is becoming, I think, one of the most important portfolios of business in the autos, I believe that I think the ancillaries would even also have a relatively stronger time going forward in next 10, 20 years. So as a directional call, we believe that I think auto ants should be remaining in your portfolio for a good period of time. Maybe I think some of the companies have had, I think, a phenomenal run in the previous past, wherein I think they moved up significantly higher on their valuation. They too have rationalized in last 12, 24 months. And I believe that I think that is where probably you are getting an opportunity. I would remain extremely convinced about the prospects going forward and believe that I think the way in which India is positioning herself with the number of new entrants into the auto segment, the auto ancillary companies in particular would have relatively better time. So we continue to like the likes of Minda, we continue to like the likes of Minda Corp, who are having, I think, a portfolio to talk about in different OEMs. And that's where we believe that I think they are better off. In fact, I think one of the key learnings that we are having from this entire segment of auto ancillary, most of these companies are trying to increase their kit value with the OEMs. And that's where probably I think some of the stronger names which I mentioned are relatively appearing more promising. And as a result of which, I think the growth which is coming up next, I believe that these companies would have a sustainable growth going forward in coming period.
Vineet, I want to talk to you about defense and HAL in particular, the last 2 weeks has been about an order win every other day for the company. The stock in pre-open is up 2.5%. Even as compared to its peers, it looks relatively better priced on PE as compared to some of the other ones like a Paras Defense or a BEML or a Bharat Dynamics for that matter. Do you track HAL? Do you have a call on this one?
So we don't have a call recently, but definitely, it has moved quite favorably, and we are quite positive on this. We believe that the order book and the operational rollout that is going to take place is going to be one of the best in the industry, given that it is one of our flagship defense companies focused on your arrows, and we think that this stock will continue to do well given all these aspects.
Okay, well, Ajit Mishra is also with us, but before that, it's 9:05. So that time of the show, when we try and give you the key brokerage calls for the day and boost for auto and auto ancillary space, clearly so, because of what the government approval has been. Harsh Johnson with the details of what brokerages are saying about that. Harsh, good morning.
Good morning, Niraj. Specifically Nomura, because they've given the impact with regard to AutoAnk pretty clearly. And what they're essentially suggesting, firstly on the larger policy, is that there's not going to be an immediate impact on OEMs, because they believe this is largely, the policy is framed around bringing Tesla to India. That's their viewpoint. And this should therefore benefit the AutoAnk more than the OEM. It's, of course, the goal is to bring a Tesla into India, but also build charging infrastructure as well as support the ecosystem with regard to EVs as well as charging infrastructure is what Nomura believes, and that's really essentially the intent. Now, with regard to some of the AutoAnk plays which they believe could be attractive at the current juncture, well, they believe that Sonacom, Sansera and Motherson are well wired with regard to benefiting from this revised policy and a possible entry of Tesla as well as other EVs into India. They believe that with regard to OEMs, BMW, Mercedes, Audi may start to lose some of their market share unless they start investing in India as well. JLR also could be a potential entrant within this space with regard to investments in India. Sansera, target price 1342. Mind you, this is a bit dated, but I've just pulled out target prices of some of these stocks. Sonacom Star 794 is the target price, and Motherson 133 is the target price given by Nomura.
Okay. Harsh, there with all the latest, and really AutoAnks are going to be in focus, no doubt, this morning. Ajit Mishra also joining us from Religare Broking. Ajit, very good morning to you. Your take on AutoAnks, they seem to be the focus this morning. Anything that you like in this space or you would pick up right now?
Yeah, good morning, Tamanna. So, this space and in fact, the other auto majors, they have been doing well. And if you see, especially their performance in the recent, correction. So barring Tata Motors, all the other names, they are doing well. And in the names which we have shared, like, Sansera, Motherson, I've been closely tracking Motherson Sumi for quite some time now. And I feel that the way we are progressing, after the every dip, the kind of traction that it's generating on every dip, it's something that clearly shows that bulls are completely under control. And this correction that we are seeing in the market in the mid cap and small cap space is something that one can look for, buying fresh positions in Motherson. So after this retracement from 125 to 100, 110 zone, it's an area basically where one can start accumulating Motherson, and 100 should be your stop being a trader. Upside 125 to 135 is something that positionally we are eyeing.
Interesting buy calls from you. You've got TCS, which looks great, but you've also got a buy call on Z. The stock is up down 20% in the last 1 month, down 50% in the last couple of months. Are you finally betting on a technical pullback on Z?
I guess, Samina, there's some, technical error, because I have recommended to go short in Z with buy on TCS.
Yeah, if you can then take us to that. Actually, I just realized it should have been a sell on Z, but yeah, our graphics say buy. But nevertheless, you still are, I guess, on the same side then. Shorting Z at these levels?
Yeah, certainly, because when it comes to the overall texture of the market, certain stocks, they didn't participate in the entire run, and they've been, gradually inching up. So the first candidate that one can look for shorting when the market turns negative are the underperformers. The stock like Z Limited, stock like Biocon, UPL, these are steady underperformer, Bandhan Bank. So I feel that, if we see, especially in terms of the index, 21,850 is what we are eyeing as immediate support. In case if it breaches the same, then 21,500 could be the next probable target for the index. So that means there will be more pain for the underperformers. And Z, I believe that 130.32 is something that it can easily test in this recent decline. At the same time, FMCG and IT, these are the two sectors that one should focus on for the long trades. And within the IT space, I feel IT majors like TCS, HCL Tech, Infosys, they are better placed. So TCS definitely one can look at even at the current levels. 4,310 is something that we are eyeing as an immediate target with stop at 4,170.
Okay. So those are some ideas to watch out for. 4 minutes left for the markets to kickstart trade. Bring up LIC and let's see if that 17% wage hike has had an impact in the pre-open session on the stock or no. Well, not really, not too much. So just down about 0.93%. Samil or Samvardhana Motherson should be brought up, as should be International Travel House because of the ITC action. And the last one is Torrent Power, just marking some of these newsmakers at the pre-open session. Samvardhana is up 1.3%, International Travel House and Torrent Power. Torrent Power is up about 2% as well, so pretty good going there. Vinit Bulinchkar, quick one on Torrent Power. Ever since they've okay, I think we've just had a technical issue with Vinit Bulinchkar, but Devin, this Torrent Power, ever since they've done this hybrid model and are winning these orders, does it make a case for people to look at Torrent Power afresh?
I believe that the larger players like insurance companies and the provident funds or the sovereign funds may probably find a more meaningful investment into this company vis-a-vis the individual investors. Because I think the growth program that this company is starting out would demand significantly high amount of cash going forward for investment. And that's where probably this company would require to have the participation of newer investors going forward. So a dilution of the capital, it cannot be ruled out in subsequent period of time. Given that possibility, I would think that the bigger investor players who are having a structured portfolio for 25-50 years on infrastructure side, they might be better off putting across their money into the likes of Taurus or for that matter, any other capex group companies, where the requirement of money would be large, and I think they would have a steady rate of return going forward for 25-40 years.
Ajit, last calls before market open, couple of minutes left. We're seeing good moves in Railtel this morning. Anything that you would spot? What would you do with a power grid?
Among these names which were beaten down badly from the PSU basket, the last week it was SJVN which rebounded very sharply and ended around the week's high as well. The volumes were almost like 2 times, 3 times to the average volume. So I feel that in case if somebody is looking for any fresh bet or adding to their position, SJVN definitely falls to that category, and because the risk reward is favorable. 119 is I believe is a strong base now for SJVN, and in case if it manages to pull out this level of 129, then maybe the previous swing high close to around 150-55 is something that it might retest. So this is something that has a favorable risk reward. Other counters like IRFC, Railtel, they may continue to trade volatile at least in the time being. So the risk reward is not favorable at current levels. Let them form any base and then we can consider.
Okay. 1 minute 20 seconds left. Vinit Bulinchkar, we just have about 40-45 seconds. But today, in Friday's session, there was an upgrade on Shree Cement. Cement stocks have been in a bit of a lull. Are you liking that pack? And what is your favorite cement stock? About 40 seconds for the answer, Vinit.
So Sagar Cements is a top pick along with Ambuja Cements. And we believe that the time has now come for the cement sector to show double-digit top-line growth along with equal EBITDA and profit.
Why Sagar Cement, Vineet?
Is the most efficient, cost-efficient player and the most intelligent in terms of asset allocation.
Fair call. Maybe we'll do a detailed one with Vineet Virgin at some point of time on Sagar Cement as well. But Ajit Mishra, Deven Choksi, Vineet Bolinjkar, gentlemen, all of you, thank you for taking the time out and being with us this morning. Really appreciate your time. About 30 seconds left for the market to open. We'll have a start which is maybe muted or flattish. Remember, the rest of Asia is mixed. Kospi was in the green. Hang Seng was okay, but Shanghai and Nikkei were in the green as well. It's a bit of a mixed picture across Asia. We didn't have a great handover from the US markets, particularly the Nasdaq. But let's see if IT stocks react negatively slightly today after having a great week. And of course, what else from the auto pack is active in the session today? Those could be the top newsmakers. But here are the first trades. We're flattish, about 43 odd points for the Nifty 50. No big changes here. Very, very flat performance. Bring up the Bank Nifty and bring up the mid-cap and small caps. So Bank Nifty about 0.25%. Mid-cap and small cap stocks flattish really in the session today. So no big change. Small caps too very flat. Let's bring up the heat map and see what's moving and what's not. Do we have any individual more red than green? So I'll mark the green very quickly. NTPC 1.22%. M&M shows a bit of a bounce from the kind of cuts that the auto pack had last week. Tata Steel marginally in the green, Coal India marginally in the green, but a lot of red, I must say. The index is 0.27%, but more red than green. What is down? Adani Enterprises and Adani Ports, 3.5% apiece on the news stories out there, but the investment plans seem pretty robust. Let's see if there is a bit of an intraday move different than what the stocks are showing right now. But clearly in the red, the top two losers, Power Grid down about 1.5%. There is Grasim down about 1%, Asian Paints down about 1%. But I don't see too many banks except for ICICI Bank in the top 10 losers. So banks are well behaved, and which is what explains a fairly muted performance. But I must say, if it's the Adani duo on the downside, the recovery from M&M in the session this morning, Tamanna, kind of stands out. Not bad for a stock which was taken to the cleaners last week.
Yeah, I think the turnaround on the EV play story is being seen in action right now in opening trade, because M&M has come out with a very confident statement saying they welcome that EV policy. The broader markets, seeming tepid there, but I just want to pull up the Nifty micro cap, and there are some moves there where everything else is very, very slow, but at least relatively on the Nifty micro cap, you have about half a point up move. LIC, let's pull up specific stocks which have been in news and see how they're going. LIC is the first one. A 17% wage hike was put in place, about 0.5% down. Not too bad, frankly. Paytm is the other one. Paytm, we saw sharp moves towards the end of last week when you had that entire sort of hangover gone. Now, whatever restrictions the RBI has talked about have come into play. They now have a new sort of business plan. So Paytm 2.5% up this morning. Z Entertainment 1.5% up. Now, they have announced another set of changes in management. So a cleanup operation on at the top levels of management under Puneet Goenka. Maybe that's having some positive moves over there. The Auto Ank pack we should quickly look at. We marked them pre-open as well, but let's see what's happening with the Motherson, Sansera and Uno, all of them up in the green. And really, this is going to be the play more than the OEMs perhaps, because the entire EV policy is linked to how much you spend and how much you make in India. So you're going to have some impact there. Railtel was the other one I wanted to pull up. A couple of orders that have come in, 352 crores from BMC. They're going to supply, install and maintain HMIS for BMC. New order wins at 5% up. So is Torrent Power, also 5% up. So these are the two that are really working this morning. But apart from that, Samina, anything interesting you're spotting?
Lots and lots of movers, Tamanna, but largely on order wins. I want to mention a couple that you've already talked about, but just building on those, you've got Torrent Power now that's moving on big volumes. The stock is your big gainer, but the volumes as well are looking quite healthy on Torrent Power. PCBL is up 5%. Archean is the one that catches my attention. And the last couple of weeks, the traction for this one has been pretty impressive. And it's a lone gainer of sorts in the chemical space. So Archean looking good with a 5% up move in trade. You also got M&M that's looking good. You've got 5-star business that's having a good day. Tata Tele, I'm intrigued to see what Tata Investments is doing this morning. It's been 5 straight days of lower circuit on Tata Investments. Continues to see a day of lower circuit, 5% cut on Tata Investments. No surprises there really. There doesn't seem to be much happening on that count in terms of positive news flow anymore. Stock is seeing some selling again this morning. Well, apart from that, you've got some of the other Adani Group companies that are seeing pressure. So Adani Total, Adani Ports, Adani Enterprise that Niraj already mentioned are seeing slight weakness. Solar Industries is also trading lower. HAL is having a positive morning on back of their order win. A couple of your IT stocks are seeing profit taking as well. So that's largely the theme. Macrotech continues to have a good run. Last week was good for them. This morning too looking good. Shipping Corporation of India, interestingly, is up 5% this morning. So
I just want to pull up Dronacharya, stock that was on my radar this morning on the wins from the army. Dronacharya is up 8% in trade this morning. And of course, drone makers, big order wins from the Northern Command. So that stock up 8%. Just Jet Airways, and this worries me. We don't know what's happening with Jet Airways, but consistently on lower volumes, though, you have been seeing Jet Airways at circuit. Last few sessions, again, 5% up this morning. So those two on our radar. Paytm also almost 5% up right now. All right, Saurabh Mukherjee is joining us today, founder and chief investment officer at Marcellus Investment Managers. Saurabh, we always love you. I love it when you come by. So great to have you.
He's also fine. His wit and wisdom is there to be loved for everybody.
As a speaker. All right, let's start by talking about what our big topic is this morning. Poll dates are announced. Is it going to be a big deal? Is it all priced in?
No, I think it's not all priced, and it can't possibly. When 1 billion people go to the elections, when 1 billion people go to the elections, you can't possibly believe that it's all priced into the stock market. I think there's two different dimensions to what we need to think through here. I think we have a small cap. A rally in India which is not underpinned by fundamentals. I think we'll have to see how that small cap rally holds up through these 6 weeks, right? 6 weeks of polling from 19th April through to 4th June. And I think the second situation is we have a global economic recovery underway. It looks like across the world, rate cycles have peaked. It looks like over the next 6 months, interest rates will start coming down. Inflation seems to have peaked all over the world. Indian large caps relative to Indian small caps are the cheapest they've been for nearly 20 years. And therefore, that's also a very interesting situation. Remember, if there is an electoral outcome which positively surprises the market, it'll come through disproportionately to large caps, given that big Indian counters are at their cheapest in 10 years, 20 years. So two different dimensions to the polls, I think. A worrying situation in small caps, which I don't think has fully played out. I think there's more to go for the small cap correction, and it'll be interesting to see how small caps hold up through those 6 weeks of elections. And correspondingly, the converse, absolutely opposite situation in large caps, where they're looking very tasty, very attractive. And as global investors come back to India, they will most probably go towards these large cap stocks.
Saurabh, of course, with what you just said, that there's so much more to go with this rally, keeping in mind that 1 billion people go into voting. We get that. What does this mean for foreign inflows? They've been spotty in the last couple of months. But of course, with so much expected and so much riding on one of the world's largest democracies, do you expect them to start coming in very swiftly, or is it going to be slow and staggered?
Right. So I think as long as the US 10-year bond, I think the US 10-year bond is the critical metric. If you get the US 10-year bond yield going up, foreigners tend to get scared. So that's what happened, for example, in January. The US 10-year bond yield went up 20, 30 bips because of that whole Houthi situation in the Middle East. Oil prices went up a little bit. if oil prices stay at around $70, $80, if inflationary pressures stay subdued in the Western world and in India, I'm pretty sure we will see punchy foreign inflows, right? I don't have a crystal ball into what the election results will be. If the assembly election results from November, December were any guide to the general election results, my reading is we will see hefty foreign investor inflows over the rest of this calendar year or in FY25. The only caveat I like to put in there is the inflationary outlook. If inflation starts picking up, right, the moment you get stickiness in inflation, the moment the US 10-year bond yield starts picking up, foreigners get jittery about coming into India. Provided that inflation situation behaves itself, I'm pretty sure we will get hefty foreign investor inflows in FY25.
Saurabh, good morning. Niraj here. Just wondering if this election period, pre-election period is slightly different than the past in one that we've had a reasonably strong pre-election rally in the preceding 1 year. Not a pre-election rally, but a rally in the preceding 1 year already. So can we kind of anticipate it, apple to apple, it's not happened in the past. And part two, quite unlike 2019 or 2014 or maybe even 2009, the market belief of policy continuity is much higher this time. So in some sense, is a part of that, if not for the small caps, but for the larger caps, priced in? I know you started off saying it's not priced in because a billion people go to vote, but I'm still asking you.
Sure. So let's look at what's priced in and what's not, right? Just to keep it very simple, over the last couple of years, large caps in India, Sensex, Nifty, would have compounded at around 20-odd%, right? Broadly in line with earnings. The Nifty PE multiple is not radically higher than what it was, say, 48 months ago. The Nifty PE multiple is not radically higher than what it was 24 months ago, right? There's no reason to believe that in large caps there's a bubble. There is no reason to believe there's excessive valuations in the Nifty or the Sensex. In that regard, whatever be the election outcome, I don't think large caps have spent too much time factoring it in. But the reverse, absolutely the reverse holds true in small caps, right? So, small caps in India, the small cap broader indices are up 140, 150% over 3 years. Over the last 12 months alone, they're up around 55%. Obviously, unless somebody out there is drinking something funny, there hasn't been 30, 40, 50% EPS growth in small caps over the last 1 year or over the last 3 years, right? And therefore, you have a small cap bubble. Big chunks of the small cap ecosystem have factored in all sorts of optimism, all sorts of upbeat news, which I don't think is based on any realistic assumptions. I think a big part of this is retail money. Demat accounts in India have tripled in the last 3 years. A lot of these retail investors have gone and loaded up on small caps. All the data shows that. And I think that's where we have a challenge. The small cap investor has more than factored in some very optimistic election outcomes. And I'm afraid some of them might not be based on any realistic analysis of Indian companies or the Indian economy.
Saurabh, in which case, assuming that let's assume that it's difficult to predict what will happen in 3 months for somebody who invests the way you do. And therefore, you invest, let's say, for 1 year at the very least, you're looking at the year at large. If the election verdict is for government continuity and policy continuity, do you think the reactions, therefore, would be more dependent not on what the election verdict throws up, but as you said, on global factors and presumably on earnings growth within India as well? And that election this year may not be as big a determinant of what the market does for the rest of the calendar as opposed to some of the other things, assuming that there is policy continuity, of course.
Yeah, I think it's a good. So you put it in a nice way, Niraj. So if the incumbent government comes back with a strong majority, I think we will see hefty foreign inflows into India. Unquestionably, the vast majority of those foreign inflows will be into large caps. Large caps, therefore, should re-rate after the elections more decisively than small caps. If, on the other hand, there is wobbliness in the election results, perhaps the ruling government's majority, if it doesn't end up being as large as currently expected, we will see a broader market pullback. In that broader market pullbacks, I think small caps will suffer disproportionately. Whichever way you look at it, we as investors should be loading up on high quality Indian large caps today and be wary of small cap valuations at this juncture.
Saurabh, just to take that forward, when you say that if the majority is not what is being expected, are you talking about 400 ke par? Because the government doesn't need that kind of a mandate to form the next, government. No party needs that kind of mandate, but that is what has been set.
That's right.
Are you saying anything lesser than that will be seen as a negative, even if there's policy continuity?
That's right. So without getting into numbers of whether it's 400 or 390 or 410, and without getting numbers there, if the government comes through with a majority, the incumbent government comes through with a majority, but not an overwhelming one, I think there's potential for market pullback. In that market pullback, I think small caps suffer more than large caps.
Saurabh, you talked about how the focus will move to large cap, and we've talked about this even before elections, right? For a long time, we've talked about if FIs need to come back, it had to be in the large cap space. Then, of course, we saw the sell-off across broader markets, again anticipating that could be a trigger for funds now to increase allocation in large caps. So there's more than one reason why large caps should be doing well. But from an election angle, one of the themes that a lot of investors, traders, tactical players have been looking at is government-focused sectors. Those are largely focused in the broader market. So mid-cap, small-cap stocks that have been touted to be the next blue chip in the railways, defense, I'm going to even go down to saying anything that's infrastructure-driven. How would you then play that theme? Would you say that because they are small and mid-cap and expensive and under the radar of the regulator for various reasons, these are stocks that even if our government focus should be avoided by investors?
So I think that's where part of the delusion, I think, has kicked in. So, for example, the FM couldn't be clearer in her first February vote on account, right? She couldn't be clearer. She reduced the growth rate of government spending on infrastructure capex, right? So the 21 budget, the 22 budget, and the 23 budget, government spending on infrastructure roughly grew by 30-35%. And for good reason, the government having had a blistering run in pushing up infra, railways, defense capex for 3 consecutive years. In the vote on account on 1st Feb this year, the FM restrained that number to, I think, 11-12%, right? And yet, the bulls who believe that suppliers to the government capex effort will become Nifty stocks are still on a trip entirely of their own, and that's exactly the kind of delusional thinking that I think will get called out as we go past the elections and into the union budget post elections.
Yeah, I mean, you can't be clearer than that. Large caps is the focus that Saurabh Mukherjee is speaking about. Saurabh, thank you so much for joining us. On the show. We'll take a very short break, but we're coming right back. Stay tuned.
Flat as flat can be for the markets. Some selective movers in autos stand out, but otherwise the market's looking very flat. But it's the pre-election season, and I think we're talking to a clutch of very important people. Sanjay Pugale, editor-in-chief at the NDTV network, spoke to Transport Minister Nitin Gadkari, who talked about the country's infrastructure push, amongst other things. Here's a small slice of that conversation.
आपने कई उपलब्धियां बताई कि क्या क्या किया है और क्या मकसद लेकर के आगे वोट मांगेगी बीजेपी, ये तो सही है। उसमें जो सबसे बड़ा एक फैक्टर रहा है जिसमें आप काफ़ी नज़दीक से जुड़े रहे, काम करते रहे, वो है इंफ्रास्ट्रक्चर का। भारत की जो ज़रूरत थी उसमें काफ़ी काम हुआ, सड़कें बहुत बनी। मेरा ख्याल है डेली 38 किलोमीटर का एवरेज आपकी सरकार ने पहुंचाया। भारत की जो इंफ्रास्ट्रक्चर की अभी भी ज़रूरत है उसको सर्विस करने वाली कंपनियां हमको कम नज़र आती हैं। फिर भी इतना फास्ट एग्जीक्यूशन हुआ तो उसके पीछे फैक्टर्स क्या है?
देखिए, पहली बात तो इसी कि आप जो बातें कही उसमें और एक बात मैं ऐड करूंगा। हमने 7 वर्ल्ड रिकॉर्ड किए हैं। अब आज मेरे घर पर है, यही सामने है, ये जो है एशियन रिकॉर्ड बना है। नीचे में रोड, ऊपर में फ्लाईओवर, उसके ऊपर में मेट्रो। तो एक प्रकार से नई टेक्नोलॉजी का उपयोग करना और जो वर्क कल्चर है उसको बदलना। हम लोग म्यूनिसिपल वेस्ट को सेग्रीगेट करके दिल्ली के UR2 में, वडोदरा, मोहम्मदाबाद, डोलेरो रोड में, फिर दिल्ली के रिंग रोड में हमने करीब 90 लाख टन से ज़्यादा कचरा डाला है। हमने 1000 से ज़्यादा अमृत सरोवर बनाए विदाउट कॉस्ट, जो पानी का कंजर्वेशन कर रहे हैं, नदी नालों का खोलीकरण किया। और इतना ही नहीं, तो अभी स्टील स्लैग वेस्ट मटेरियल वो हमने यूज़ किया है। यही मैं आपको कहूँगा कि वरोड़ा बनी, यहीं से हमने बाम्बू का क्रैश बैरियर बनाया पहली बार। तो एक प्रकार से अभी कंस्ट्रक्शन इक्विपमेंट में हम अल्टरनेटिव फ्यूल इलेक्ट्रिक का यूज़ करने के लिए प्रोत्साहित कर रहे हैं। इलेक्ट्रिक के ट्रक ला रहे हैं, अलग अलग प्रकार के नए ग्लास फाइबर स्टील हमने लाया, बाम्बू का जैसे हम यूज़ कर रहे हैं। तो एक प्रकार से क्वालिटी के साथ कॉम्प्रोमाइज न करते हुए हमने काफ़ी बड़े परिवर्तन सिस्टम में किए हैं और इसके कारण वर्ल्ड क्लास हमने प्रोजेक्ट बनाया। अभी जैसे द्वारका एक्सप्रेस हाईवे आप जरूर देखिए। मुझे नहीं लगता कि वर्ल्ड में भी आप इस प्रकार के प्रोजेक्ट देख सकोगे। टनल भी है, ROB भी है, ROB भी है, ऊपर में फ्लाईओवर भी है और एक इस पर 4 लेयर है। तो एक प्रकार से वर्ल्ड क्लास इंफ्रास्ट्रक्चर मोदी जी के नेतृत्व में हमने बनाया और मोदी जी ने भी तय किया है कि हम देश का विकास करना है तो इंफ्रास्ट्रक्चर को प्राधान्य देना पड़ेगा, वाटर, पावर, ट्रांसपोर्ट एंड कम्युनिकेशन। और हमने इसमें जो काम किया है इसका इंडस्ट्री और ट्रेड और बिजनेस का फायदा होगा, एक्सपोर्ट बढ़ेगा और हमारे युवाओं को रोजगार मिलेगा और गरीबी दूर होगी और देश की ग्रोथ बढ़ेगी। ये हमारी लाइन अब लोगों को दिख भी रही है और लोग उसको रिकॉग्नाइज भी कर रहे हैं।
जी, आप चूंकि नट बोल्ट भी सब चीज़ों का जानते हैं और जो अब लक्ष्य रखा है ग्रोथ का, तीसरी बड़ी आर्थिक ताकत बनाने का, उसके लिए जितना और जिस तेज़ी से काम होना है उसमें कुछ बॉटलनेक्स काफ़ी हैं। एक का तो जिक्र आप भी करते रहते हैं, वो है लॉजिस्टिक्स का कॉस्ट कैसे कम करें। दूसरी चीज़ है कि जो और इनफिशियंसीज हैं, काम तेज़ी से हो पाए उसके लिए। तो अब हम ये जानना चाहेंगे कि अगर दोबारा आप लोग पावर में आएंगे तो वो बिग डील्स क्या होने वाली हैं जो कि इंक्रीमेंटल काम नहीं, ट्रांसफॉर्मेशनल काम करेगी।
देखिए, पहली बात तो ऐसी है, जो इसी साल दिसंबर के पहले आपको काफी बड़ा परिणाम दिखेगा। चाइना में लॉजिस्टिक कॉस्ट जो होती है वो 8 से 10% है। यूरोपियन कंट्रीज और अमेरिका में वो 12% है और भारत में 14 से 16% है। मेरा विश्वास, हम 36 हाईवे बना रहे ग्रीन, दिल्ली से मुंबई। अभी हम नागपुर से मुंबई एक्सप्रेस हाईवे समृद्धि महामार्ग बना, उसको जोड़कर पुणे से संभाजीनगर औरंगाबाद हाईवे बना रहे। तो नागपुर से पुणे ये करीब 4.5-5 घंटे में हो जाएगा। नागपुर से मुंबई ये 4.5-5 घंटे में हो जाएगा। तो एक प्रकार से पूरा एक प्रकार से जियोग्राफी बदल गई है। और आपको मैं बताता हूं, इससे क्या होगा कि एक ट्रक दिल्ली से मुंबई महीने भर में 4 या 5 ट्रिप मारता था, अब वो ट्रक 10 ट्रिप मारेगा। और फ्यूल में हमने चेंज लाया, अल्टरनेटिव फ्यूल, बायो फ्यूल। अभी डीजल के बजाय अभी हमने मिथेनॉल का यूज किया, बेंगलोर में 15 बसेस को 15% मिथेनॉल डाल के बसेस चलाई। अब अशोक लेलैंड ने पूरा मिथेनॉल का जो ट्रक है 100% मिथेनॉल पे बनाया। अब हमने बायो सीएनजी, बायो एलएनजी के करीब 300 फैक्ट्री शुरू हो रही है, करीब 36 शुरू हो गई है, तो वो मिलेगा। हम फ्लेक्स इंजन पे इथेनॉल का यूज कर रहे हैं, इलेक्ट्रिक ट्रक, इलेक्ट्रिक बसेस आ रही है। तो जिस प्रकार से ये जो कॉस्ट है डीजल पेट्रोल की तुलना में एकदम कम है। जहां 110 रुपए का डीजल लगता है, वहां 6 रुपए की, 8 रुपए की इलेक्ट्रिसिटी लगती है, तो एकदम लॉजिस्टिक कॉस्ट कम हो जाएगी। और उस प्रकार से 22 रुपए इथेनॉल का भाव है, तो डीजल का भाव 110 रुपए लीटर है। फिर फ्लेक्स इंजन में मेरे पास टोयोटो गाड़ी है, वो 60 किलोमीटर 60% इलेक्ट्रिक पर चलती है और 40% वो इथेनॉल पे चलती है। इथेनॉल का रेट 60 रुपए है, पेट्रोल का 120 रुपए है। तो अगर हिसाब किया जाए तो 25 रुपए लीटर पेट्रोल का भाव होता है और पोल्यूशन नहीं के बराबर है और गाड़ी एकदम बेस्ट है। तो हमने टू व्हीलर भी बनाया। तो ओवरऑल फ्यूल में और रोड में जो बदलाव हुआ है उसके कारण लॉजिस्टिक कॉस्ट निश्चित रूप से सिंगल डिजिट पे आएगी। और मेरा टारगेट था कि 2024 समाप्त होने के पहले ये 9% पे आएगी। अब देखिए 2024 नजदीक है और आपको ध्यान में आएगा कि नए नए टेक्नोलॉजी का और अल्टरनेटिव फ्यूल और बायो फ्यूल का उपयोग करके निश्चित रूप से इसमें रिवोल्यूशनरी चेंज होगा, ऐसा मेरा विश्वास है।
All right, that was Nitin Gadkari speaking exclusively to the NDTV network, and the focus on capex, infra, all of those spends possibly resuming after July. That will be the first budget post-elections, may be crucial as a factor to what markets are looking at. Andrew Holland, CEO of Avendus Capital Public Markets Alternate Strategies, joins us now on the show. Andrew, very good morning to you. Great to have you on. Just wanted to understand that tactically, how would you play the next 3 months? You have give or take about 2.5 to 3 months before now. That's the announcement of the poll dates and the results. What would be your positioning?
So it's a number of factors here, Tamanna. I think you've got global factors as well, not just our own local factors. So this week's a busy week for events globally. We've got the Japanese central bank tomorrow, where there's expectations of a first rate hike in I don't know how long ago it was since the last one, and then you got the Fed 18th and 19th, and the Bank of England on Thursday. So pretty heavy week in terms of data globally. So those will be some factors. Obviously, we don't really have the results season kicking in, so there's no new news to come in our markets. You could probably say that a lot of the pre-election rally happened at the back end of last year after the state elections. So really, I suppose what I'll be looking for now is the manifesto when that comes out, and what that is saying, for the government that's in power now, to see what the possible kind of new developments might be going forward, because they have followed that manifesto pretty much along the way since 2019. So I think that would be the catalyst, I think, for the markets, if there's something new in there, or it just really kind of gives us the confidence that there's no real big changes coming.
Andrew, if that is the case, do you then think that this rally will have more legs, or it's going to be the run-up in anticipation, which began many months ago, and then sell the news kind of play? Could that be different in that sense then?
No, because let's just say when the elections are over and whatever the outcome is, and I think we've all seen the polls, then it really depends on the budget. And I think that will be the deciding factor there for the markets in the very short term. I think we know the story of India. We know that the government's going to spend on defence, railways, infrastructure, and if the corporate capex picks up as it has been doing, that's the catalyst for the kind of multiplier effect across many industries, and that will play out over the next 2 to 3 years, and earnings will be upgraded because of that. So that's what we're all looking for. So in between time, you might have these kind of spouts of rally, but I think it'd be more globally led than it will be locally led, because as I said, there's no real new news to come over the next 2 months or so.
Andrew, typically, good morning, Niraj here. Would you be, as a large house, would you be tactically positioning a long-short portfolio to take advantage of pre-election moves?
Not really. I mean, it's going to be a factor of a number of things. So let me put it slightly differently. Why would I say buy the private banks? I buy the private banks because I expect interest rates to start falling, the NIM pressures to start coming under less pressure. And those would be factors that would happen between now and the election. So it's not really a factor of the elections. So those are the kind of things that we start looking at, Niraj. It's not necessarily we're playing for the election upturn, but it'd be certain factors for certain sectors which would get us excited or more pessimistic in the very kind of short term.
Andrew, okay, so if that is decided, let's talk about what do you make of the recent news flow, if you will. Now, there is amongst the big newsmakers over the last 3-4 days, aside of the election dates coming out, is this whole EV policy and what it would do for specific pockets. Now, what's your sense? Do auto ancillaries tend to benefit because there'll be suppliers to everybody coming in, whether Indian or global OEM? Do you think Indian OEMs will be able to compete because they are kind of present in the lower ticket cars versus the premium cars that supposedly a Tesla will come in with? What is your sense?
No, my sense is that's the best way to play because, obviously given this new reform that the government's brought in, from what I've seen, and I still want to look through the kind of fine print, is that it's kind of a bit of a non-event for the local players because it's more at the premium end. But I think the competition's going to, heat up in the EV sector. And the best way of playing it is obviously through the ancillaries because, they're going to be the ones supplying each of these manufacturers anyway. So I think that's the best way to play the EV story, unless you really have a view that XYZ is going to company is really going to be the big winner. And I don't think the market's really kind of saying that right now. And it's really early days. So I think I'd rather play it through the auto ancillaries than the EV makers at this point.
Andrew, give me two sectors which you would book profits in right now and look at rebalancing those funds to other sectors.
So I think what we've been doing over the past few weeks is rebalancing some of the PSUs in the banking sector, for example, back to more the private banks, because we feel that the run up in the PSUs is not just in banking had probably run its course. And therefore, the value was a little bit more in the private banks, where there's been obviously a lot of pressure on the share prices because of the NIMS compression that we've been seeing over the past few quarters. So that we think has been played out a little bit to the full extent that it can in the very short term, and therefore any rally in the banking sector will be led by the private banks.
Very sharp, Andrew, very sharp views coming in on what's going to be the future of small cap and mid cap sort of investments. We were speaking earlier with Saurabh Mukherjee, who was betting on large caps, especially ahead of the elections, or whichever way you look at it, you're going to have bond inflows coming in, FI interest coming in post-elections. Do you have a similar view? Are you now focusing more on large caps versus the broader markets and the smaller companies?
Well, our funds have always moved towards the large caps because it's a hedge fund. So that's really our natural kind of bias. I get the point of that, if foreign funds are coming, they're going to go for large caps first. But I think we're doing a disservice to mid caps and small caps. I'm not saying I'm taking all of the kind of small and mid caps, but certainly there's certain sectors which are going to do well over the next 3 to 5 years, and those would include small and mid caps. So I think to say that I just avoid small and mid caps would be the wrong thing to do. I think you're going to get some great companies coming out of there in different sectors, and we talked about them before. But electronic manufacturing sector is a great sector. It's a very long term play on the on both India and exports going forward. So those are the kind of small and mid caps which you just need to have in your portfolio. So I wouldn't say that necessarily. Yes, in a broad index sense, you're gonna probably do better in large caps in the very short term. But I think over a longer term, small and mid caps, particularly given we're a domestic-driven economy, interest rates will be coming down and earnings will be rising. That's all the recipe for small and mid caps to do better going forward over a longer period than large caps.
Andrew, very lastly, beyond elections, on a more strategic investment call, give me one or two stocks that you're extremely constructive on and will look at fresh allocations even at these prices.
Individual stocks I can't, but the sectors which I continue to like are the leisure sector and hotels, airlines, beverages because of premiumization, and of course, defence and renewables is going to be areas which the government will continue to invest in heavily. So those are the key sectors where I think below the index you're going to make quite a lot of money over the next 2 to 3 years.
Okay, Andrew, final question from my end. What would worry you? I mean, you mentioned about global factors being a key point. This week is an important one. BOJ tomorrow, Fed Wednesday. In some sense, does BOJ become a key driver or not really?
It could be, Niraj. I mean, there's a complacency over the currency at the moment. It's kind of depreciated so much. It's been a great tailwind for all Japanese investors. But if that carry trade reverses, that has implications not just for equity markets, but for bond markets as well going forward. But I think it's probably early days. I think I'd want to see what the Fed is going to say and the depreciation or appreciation of the Japanese currency if that takes hold going forward. So that would be one risk. Obviously, with Putin being re-elected in Russia, that's another kind of potential kind of conflict which could happen. And of course, we've got the US elections later this year. And whilst, I think the jury's out of who's going to win, the narrative is that, Trump is good for equity markets, which is probably why the equity markets is doing well. But obviously on policy, it's very transient and therefore, could hurt markets as well. So that's a confusing picture out there, Niraj, at the moment in terms of what some of the elections might mean outside of India.
Right, Andrew, that of course is the broader market picture. But thank you for joining us today on the show, talking to us about your views in the markets and of course playing out the next couple of months as we go into voting very soon. Well, in the meantime, the markets are doing okay, nothing too exciting on the street, but this comes in as a little bit of a relief after last week that turned out to be quite rough for the street. The Nifty is taking a breather, bulls and bears at bay literally this morning, trades flat with the 39.40 per cut. So volatile, but in a very, very tight range. Bank Nifty as well, not doing too much. The breadth of the market is also not looking too bad at this point of time. Across the broader market is where the action really is, but amongst the top gainers and losers on the Nifty 50, M&M continues to be a top gainer. Metals aren't doing too badly. ONGC, Apollo Hospital, Coal India are seeing a little bit of buying in today's trade. On the sell side, Adani Twins are looking weaker. UPL, Asian Paints, Tata companies continue to see selling pressure this morning as well. So Tata Consumers, Titan, Tata Investments, a whole host of Tata names are bearing some weight of the markets today. Infi, iBank, HDFC as well, not doing too badly. Across the broader market horizon, Tata Investment Corp is down 5%. Coforge is looking weak. Jindal SAW, IRB Infra, so all the gainers of last week, the few gainers that we had in terms of trade last week are seeing a little bit of selling this morning. The morning is about order wins, so counters like Torrent Power are leading the way up 8%. Macrotech Developers has had a pretty good run for the last couple of trading sessions, continues to be one of your tape gainers this morning too. Media counters as well, not doing too badly. You've got retail names like Shoppers Stop also trading with a gain of 2.5%. But yeah, interesting guys, it's taking a bit of a break, and I think it's a good thing after the very volatile negative trade that we saw last week. So no decisive moves on either sides, but may just not be too bad.
In terms of real estate, you spoke about Macrotech. Macrotech is a bit of an exception. The index under pressure today, a Prestige, a Brigade, all of them seeing quite a bit of, hit over there this morning. And real estate tends to be a bit subdued before an election cycle. It's a place to park money, and you do see exits at some point when you have to fund expensive elections. But another interesting story we thought we'd put on the radar for you. So Jefferies has come out with a note, 11 ideas likely to deliver 15 to 25% CAGR in the next 5 years. And these are specific stocks they've given us. Harsh is joining us now with more details. Yes, Harsh?
Well, absolutely, Tamanna. Let me start off alphabetically, but I'll try and focus in on the ideas. 2.5 to 3x in the next 5 years. First off, Amber, they're saying that the shift from ACs to components and the PLI will drive a 36% EPS CAGR all the way to FY30, which is why they've kept the target price, or rather the potential returns, at 3 times for Amber. Target price 9740. Axis, they're expecting a 17% loan CAGR, 18% EPS CAGR all the way through FY29. Target price of 2810, again 2.7x odd. We're looking at Macrotech. The housing cycle, they believe, is going to be prolonged, longer runway, and they're expecting a 17.5% CAGR in pre-sales growth all the way through FY30. Target price of 3,000 on Macrotech. Quickly switching over to Max Health, doubling of bed capacity by FY30. That is set to drive a 20% 5-year EBITDA CAGR. Target price they've given is 1925. That's almost 3x again. You're looking at SBI. ROA expansion is what they're seeing in SBI. They're expecting ROAs to be above the 1%. Earnings CAGR of 18% plus, and a possible change even in investor perception is what they're building into SBI. 1860 is the target price they're giving, 5 years. Zomato, low penetration, longer runway, and a 20 times PAT expansion over the next 3 to 5 years. They're expecting a target price of 400 on Zomato. Those are the top 6.
Interesting, some of these ideas. Viewers, keep an eye out for these. We'll put out a story on our website as well for you to read what Jefferies is trying to say. Some stock ideas and stock ideas are always welcome. But with that, it's a wrap on this leg of India Markets Open. From all of us who put this show together, thanks so much for tuning in. Stay tuned. Up next is Talking Point. Thanks for tuning into Talking Point. I'm your host, Niraj Shah. The case for a chat today, well, it can't be anything else, or one of the points has to be around India's weightage in the EMs, and the second point has to be around elections, because both of those things are front and center. So we obviously talk about that. We also talk about a very specific subset within the markets, which is the recency of the announcement prompts us to do that, which is the new EV policy and the impact that it has on a very large sector, which is autos. Joining us to talk about all of these and more is Aditya Suresh, Head of Research and Strategy India at Macquarie Capital. Aditya, it's been a while. Thanks so much for taking the time out and being with us. Okay, maybe I'm not getting Aditya's voice. Aditya, can you hear me? Okay, I think I have a problem with Aditya's audio. We'll try and patch that. But okay, let me just try it again. Aditya, can you hear me?
Niraj, I can hear you clear.
Now I can hear Aditya loud and clear. Aditya, thanks for taking the time out. Aditya, let's start off with the global backdrop within which India operates as well, because FI flows haven't quite been that great. People anticipated with the election verdict post the state election decision in December, if the June election verdict seemed to be a shoe-in, that flows will start from Jan. That hasn't quite happened. While India's weightage in EMs has gone up, while the bond indices inclusion is all coming in. So explain to us from your perspective, how are your global clients thinking about investing into India?
Yeah, no, Niraj, so thank you again. I think the backdrop is still fairly constructive when you kind of think about India's kind of growth outlook, thematics which are at play. India is still one of the larger emerging markets which can actually grow labor, capital, factor productivity. And this is something which you can kind of get behind as a theme over, let's say, a decade. And there's a bunch of work which we've done around this with our big book of trends. So I think the thematic backdrop and the growth kind of backdrop is clearly something which attracts investors. I mean, this is priced in is I guess the second part of that piece. And that's kind of where we kind of have more challenges answering that question, in particular in that, say, 6-month, 12-month kind of window in the short term. So that's one side of the equation, Niraj. But then, like even when I think about, as you're putting up on the chart here, which is India within emerging markets, our share continues to kind of increase. Today, we're about 18% of emerging markets, while side of China has kind of come down from 40% down to 25%. If you kind of push and ask, where do you think India's weightage could expand to over the next, say, couple of years? We're more in the camp that it further expands, even with kind of the rich kind of valuation backdrop. So I think that it's a thematic undertone, though, which is really still a fairly key support factor here for India as a market. You're not seeing that in the flows in Jan and Feb, but you did see that through last year, where we saw about $20 billion worth of inflow, even with these high valuations.
Okay. Do we see the advent of flows, Aditya, just to get this clarity, if they are to come in, because under this constructive backdrop, post the formal verdict of the election, or does the election have not much to do with it this time?
I think that there is an element of that when you're kind of getting into these investment committee kind of meetings type. There's probably like, let's get this across.